Hello, today, whatever it is, I interviewed Josh Cosman, author of The Buyout of America, How Private Equity is Destroying Jobs and Killing the American Economy. This article, I've listened to 2 or 3 interviews of this man, and it's a very interesting story. It's more interesting to me because if I've got any interest, or had at the beginning any interest in this money stuff, it was via this what I used to call LBO stuff. Reading down a bit, Josh Cosman. Private equity firms are mostly former Wall Street bankers who raise money to buy companies on credit. They used to be called leverage buyout firms. And when the first leverage buyout boom went bust in the 80s, they regrouped and called themselves private equity. Now, that's quite a story. We're talking Milken, really. Drexel Burnham Lambert, who I think went out of business in the late 80s. And Milken was put in jail and fined $1 billion. And they had wild parties, I think over in California, called the Predator's Ball. And it was a flashing red light, so the authorities had to do something about it. But they realized that it was still a huge moneymaker, so what they did was they unscrewed the red light, threw that aspect away, and ever since have been doing this money-making thing. About 10% of all people employed in the United States are employed under this sort of system, leverage buyout, where it's too complicated to explain. But what must happen is that a lot of profit is made to pay back the borrowings that were taken on board in order for these people to buy the company in the first place. Things must work. It's very much like taking a mortgage on-ish. I've finished there, I think. Right, move on to Bill Black, who all of us should know who he is and what he's been pumping out. He's incredibly boring because it's generally always the same thing, but is he ever wrong? This article in Eve Smith's Naked Capitalism blog starts, the New York Times published a column by its leading financial experts, Gretchen Morgenson and Louise Story, November 22, 2011, which contains a spectacular charge against the Obama administration's financial regulatory leaders. And I have waited for the rebuttal, but it is now clear that the administration does not contest the charge, or at least does not choose to. The headline is Bill Black, More Proof of Obama's Policy of Covering Up for Elite Financial Criminals. It is not so much a political thing. It's not Obama and Democrats. We can be wholly convinced that whoever was Republican in would do the same thing. Interesting note that now Gretchen Morgenson and Morgenson than Story has gone to the bigger story again, where she's probably more comfortable, because over the last 2 or even 3 years she's been trying to get down into the minutiae of the whole Wall Street thing, and has quite frankly got quite a lot of it wrong, and has been losing reputation because she hasn't quite grasped it. But she's right enough when she gets the big picture. This is just an article, I forget where I swiped it from. Paul Volcker likes to say that the only worthwhile financial innovation over the past 20 years has been the ATM. So I suppose it was only a matter of time before that too was rendered evil. That's not really evil, but here, courtesy of Peter Eavis, is how the ATM at the Holiday Inn in Orlando now works. It doesn't just charge $3 per withdrawal, but rather the higher of $3 or 3%. And if you read down below, that is, the owner of this terminal, Holiday Inn, will charge a fee for cash withdrawals. This fee is in addition to any fee your bank might levy, and it's 3% or $3, whichever happens to be higher. I think we'll move towards a time where services will be provided for the people that can afford them, pushing away the poor people, who service providers will more and more ignore. Bloomberg getting out into the world. Dubai shares decline to the lowest since June 2004, just showing that around the world things are not still looking up. Why does Bloomberg do this all the time? Dubai's benchmark stock index retreated to the lowest level in more than 7 years on concern that full-year earnings may disappoint. Fairish enough. And after France and Austria were stripped of its top credit ratings. I mean, when you got shares declining to the lowest since 2004, France and Australia's credit rating getting downgraded the day before doesn't really come into it, does it? Still, that's obviously how sub-headline writers work. Financial Times, what is my this morning? Saudi Arabia targets $100 crude price. Saudi Arabia is aiming to keep oil prices at about $100 a barrel, a third above its previous public target, in a sign that Riyadh needs higher oil revenues to sustain big rises in public spending. And quite frankly, you can never believe what Arabs say. But on this occasion, everybody had worked out that Saudi Arabia needed $100 a barrel. So they're really only confirming what everyone knew. And when they say they'd like to target 100, they do have the production capacity to target 100. If they want 100 and it looks like it's going to fall below, they can easily make it 100. So it's just highly unlikely, unless they're doing what Arabs often do, which is lie outright. There's the chances of oil going below $100 a barrel ever again, unless the world falls apart, is very small. Because if it really wanted to, and did something that Arabs generally don't do, which is find something and stick to it with a fixed mind, Saudi Arabia are completely capable of making the price $100 a barrel. Even if it's not just production, they have all these round-the-back sort of deals with people to make it happen in a paper sort of way, even if it's not in a physical sort of way. They can do it, whether they do or not, but they say they are going to. Over in the United Kingdom, there's talk about Scotland breaking off from the United Kingdom, which I don't listen to much, but because it just sounds talk. I don't know what it's all about, quite frankly. But the Financial Times just pointed to this extremely unfortunate chart for them, noting at the bottom that approximately 80 to 90% of UK oil and gas production falls within Scotland's boundaries. We can see that Scotland has timed its run extremely badly. If it had started this idea in the 70s, it might have come to something, but look at that slowdown from all this century. That's oil and gas production. I imagine that it's not a physical anything, it'll just be an index number at 100, but doesn't matter what it is, you can see that fall off, depletion, and it's horrendous. And of course that's not the sort of thing that has a rebound. The only way to rebound that is a miracle, and miracles don't often happen in physical scientific things like oil. So sorry Scotland, you'll have to rely on whiskey and fancy jumpers or something. Oh, and banking. Yeah. Out there in the big world we have the Baltic Dry Index. I've got this longer chart that goes back to about year 2000, and we can see the great swoop up Baltic Dry Index, how much it costs to hire a certain size of ship. And the great whoosh up to 2008, and then the great whoosh down with the Great Recession, then the trying to claw it back. And the green line is a 200-day moving average, and you can see that's been moving down for the last couple of years. And if I can just point you to the right at the end of this, is that horrible turn down in the last month. It's just dropped down again, and it's approaching the lowest points which were at the dot-com crash, the bottom of the Great Recession, and now it's heading down there again. It does not shout to me that world trade is a booming thing. This is just a headline that caught my eye in those captions on newspapers because I just had to have a look at it. It was Euro debt crisis likely to be over soon, predicts HSBC, Hong Kong Shanghai Banking Corporation. And if you read it, what it is they've gone over to Asia, a load of Western people, and given a conference, a high-powered conference, and tried to convince the people over there that everything is fine, when of course it isn't. I've pulled this out of the article. A straw poll of the floor, a sondage, a poll. We all know what a poll is. The floor is the people attending. However, revealed that barely any of the attendees saw investment potential in Europe, preferring the prospect of China, Southeast Asia, India and the United States. While most of Asia's economies are still showing robust growth led by China, there is widespread anxiety that Europe's problems could trigger another financial crisis. Exports from Asia to Europe have slowed, and somebody, Kuroda, the president of Asian Development Bank, said he had noticed Western banks pulling away from Asia and tightening credit, a move which has seen borrowing costs in the region begin to creep up. This, actually, there's a lot to be saying here, and there's something I've made even notes I want to say. How are we doing for time? Oh, well, you can just hang on or not. At the bottom, the money is still in the United States and in Europe, the money. And the money that these Asian people need is there. It's in Europe and it's in the United States. These are the rich, wealthy places. You get the idea that China is booming and coming on and being rich. China is one of the poorest countries in the world. The money is in Europe and in America, because that's the sort of money that always was the powerful money. And it can, unfortunately, it's hot money now and can be moved in and moved out. And with the European banks, who are the biggest lenders to Asia, and the rest of the world as well, they are the biggest lenders in the world, with their problems, they are withdrawing from extremities, as they always do. So funding is coming out of Asia, the rest of the world, and it's all kind of sucking home to the body of the octopus. Right, what else did I want to say here? Preferring prospects of China, Southeast Asia, India and the United States. Quite frankly, anybody that now invests in China, Southeast Asia and India, I would say was as thick as a brick. If you invest in the United States, you're probably going to do all right. Now, I made a note of this because a comment came in yesterday that I imagine it was from the United States, because it had a couple of thumbs up votes, was that the euro is a lot better than I'm painting it. And this is from an American point of view. And what came to my mind was this was, unless I'm wrong, I'm just presuming, so I'm sorry if I'm totally wrong, but I get the idea that a lot of Americans, familiarity is breeding contempt with America and the dollar, and you're completely and utterly wrong. You're just close enough to have that familiarity which breeds the contempt, but you're not far enough away to see the bigger picture, to see that, okay, the dollar and what's happening in America is miles from perfect. It is really bad. But the rest of the world is even worse. The emerging markets are not approaching the West by any stretch of the imagination. Without Western money going into them to give them what they need to make the manufacturing to sell to the West, but much more important, the Western buying power to buy their production, they are nothing, and they are going nowhere. America is by far and away, miles away, in the best condition, the best placed country in the world, by far. So any of this sort of America's rubbish, and I guess that the euro will be fine, because just on this strange thing that America and the dollar is rubbish, is, in my opinion, completely and utterly wrong. You just don't know enough. All right, what else did I want to say? Germany. I just did want to say something about Germany. I think it was Sned that put the comment in. On Germany, Germany has a great advantage from a weak euro. So their advantage is to stay in the euro, keep the export thing going, and everything will be fine. And that's why I think they'll take option number whatever it was, that they'll kind of try and keep kicking the can down the road with their export advantage, money surging into Germany. The problems are, besides the problem that, we've got the people of Germany to take into account. The people of Germany think that they've got savings in their little local savings bank. We're putting aside the fact that those savings behind the scenes in that little local savings bank have actually lent the money to peripheral countries that have spent the money on their people, and their people have bought Mercedes. Leaving that besides, the people still think that they have savings, and that is the most crucial thing in German politics. It's good to keep the economy turning over and selling lots of Mercedes, but that's going to stop with the periphery falling off, and the absolutely crucial thing will be for the government to ensure that those savings that the people think that they still have in those little savings banks are safe. And if that ultimately means pulling out of the euro to make sure that those are safe, because they'll then turn to new Deutschmark type euros, they'll do it. Of the choice between trying to keep everything going export wise but losing the savings of the population, and having to struggle with a higher currency but keeping the savings of the population, they will ultimately keep the savings of the population and struggle with a stronger currency outside the euro. And I was going to go on about the problems of money, borrowing short and lending long, but I think this has gone on quite long enough, so I'll leave it there. Bye.